Daily outlook for Thursday, July 30th. Alright, we can see yesterday FOMC has delivered lower in the range. We'll look at the profile when we look at a 3-day look back. The market has created a low of day here inside of this was a PD rate that we had identified, which was a second discount drawn liquidity below here, this daily suspension block. This was a new day opening gap that was left unfilled inside of the range. The market has traded inside of these levels and created the low of day. All right, so profile of week here, in my opinion, is looking like a classic sell, but we'll have to pay attention to the open. Okay, usually after these FOMC earnings, right, expansions, it could very well be that the market will open, gap up, and start trading higher, or open, take out the low, and start trading higher right away. Okay, if that were the case, I do believe that a low-hanging fruit drawn liquidity for this trade idea should be 50% here of this daily suspension block that the market has expanded below. Look, if the market will be very aggressive on a gap higher, right, or quickly take out the low and start trading higher, then I do believe that it may come back to the previous daily open. Okay, but overall, like, I'm looking at this range, and the range is pretty balanced in my opinion here, right? And there's nothing so far that's telling me that the market will want to trade higher at the moment. Okay, in my opinion, the drawn liquidity here is now the discounted weekly fair value gap. Okay, this aligns here with standard deviations from what is currently all-time highs, right? Okay, so discount drawn liquidity, I'm looking at the range of the weekly fair value gap. Premium drawn liquidity, I might have said discount here, sorry, before. Premium drawn liquidity, if the market were to offer an opportunity to trade higher, I do like here 50% of the daily suspension block, and past that, be looking at the previous daily open. Look, if it's really bullish, then the previous daily high can be traded to, but I'm not sure I would be comfortable targeting anything past it. Okay, obviously will all depend on the conditions of the moment. We can see here the 4-hour chart, right? So 3-week look back. The market has never revisited the new week opening gap, so pretty bearish in my opinion here. And again, this 4-hour chart here is basically telling me the same picture as the daily, as right, we're now trading inside the discount, right, of the 3-month look back. As we know, on the 3-week look back, the 3-day look back, there's obviously nothing in discount, so we have to refer to these daily or weekly discounted PD rays, right, to build our dealing ranges. So again, in terms of a discount drawn liquidity, I do like here the weekly fair value gap if the market will keep on expanding lower. And if the market will find here a rejection after trading to the previous daily low, or simply have a gap up, then again, the market has been sensitive here, as you can see, to 50% of that daily suspension block we're just talking about. So I do believe that this can be a good drawn liquidity. Right, and you can see that overall the FOMC wick here, the reversal that ended up happening, forms from 50% of this daily suspension block, right, and left a large wick inside of the range. All right, so that's why I had said, looking at the daily chart, overall, if there will be a premium drawn liquidity, it should look like, you know, the previous daily open. The range is pretty balanced here, in my opinion, right? That's what I'm saying. Unless there's a crazy gap up that were to happen at the open, I don't really see how the market would have the juice to reverse here the weekly profile. And you know, at this point, it looks unlikely to me that the new week opening gap will be traded to. We'll see how it opens, right, and how it delivers. Obviously, everything's possible. And in terms again of a discount drawn liquidity, the weekly fair value gap located inside of the range. All right, we can look at a 3-day look back here. So we can analyze the phase of price of delivery. When we analyze Thursday, right, it always happens to align perfectly with Monday, with the weekly open. So on Monday we had a classic sell profile. This was followed Tuesday by a swing to Z profile, right? So expansion to consolidation profile. And again, this is why doing my outlook yesterday, I was saying that it is very likely that these lows here will be traded back to. Okay, even though it's sure there might have been here the signs of a reversal, but again, the way that this market closed, the way that this day closed, and overall the market being inside of a bearish order flow, a bearish trend, uh, right? That's why I believed that it was low probability that price was going to trade higher without first trading lower. Right now, it has traded lower. I tried to expand higher and failed again. Okay, and overall, this daily profile here is what? Right, this is a seek and destroy profile. The market at the open takes out this range high, comes back in the range, right, and stays internal to the range for quite some time until New York. Eventually, New York takes out the previous daily low, comes back higher in the range from there. FOMC runs the London highs, and then from there, we have a divergence here. And then from there, the market trades lower again. Okay, so we have expansion, consolidation, consolidation to expansion. Right, so the market will be opening here from an expansion lower. Okay, so if it will want to continue trading lower, okay, as a continuation. Now, in this case, I don't think it's relevant to analyze, say, the previous daily look back or the 3-day look back, since we already have some higher time frame discounted arrays inside of this range that have proved to be sensitive, right? Say this day suspension block, or so far here, this, although this is a very small level, right? This new day opening gap inside of the range. Today the market has created a low of day at these levels. So in terms of a continuation lower, I would ideally want to see for this hourly fair value gap here. This is located, from anywhere around 50% to 25% of the previous daily range. I do think that this level should be important. It is important in my opinion because it includes, right, the range of a bearish order block. It also includes the range of a bearish breaker. Right here, the market traded lower. Sorry. Right here we had a range. The market traded lower, eventually trades higher above this range, right? Trades above the series of down close candles, but then fails. Okay, so that's what I'm saying. This fair value gap, in my opinion, should be sensitive. This is also a balanced price range. So I find it hard to believe that the market will want to inverse these levels unless, again, there's a gap higher or a quick sweep of the previous daily low to then trade higher. Okay, and if not, in terms of a discount drawn liquidity, this is the same level that we have on the daily, the 4-hour, right, which is represented by the weekly inefficiency. Because here, if I were to put or simply analyze the previous daily range here, most of the PD rays that we're going to find are going to be inside of here, right? Because before that, it was simply a consolidation. The expansion that follows this consolidation happens inside of the last hour here. If we're to look maybe at that on a 15-minute chart, basically, right, you can see that we have a fair value gap at, right, this is the previous daily range. We have a fair value gap balanced price range here at 75%. You would have a fair value gap at 50, and you would have a fair value gap at 25. Okay, so that's why I'm not really focusing on identifying these PD rays, although you could, right? There's nothing wrong if that's what you're going to do, but all of these basically form from the daily suspension block. Okay, and these levels have been sensitive to price action. So, in case of a retracement in the range, I would like to see the market fail anywhere in between fell to reverse the range, right? Simply create high resistance in the range as a retracement and then continue trading lower. Anywhere in between 27,500 up to 27,700. If the market would trade past that, then I do believe that is likely going to want to trade for the previous daily open, right? And then we'd need to analyze here the 4-hour rejection block of FOMC. Guess it's pretty straightforward today. I'm going to do a quick recap. Yesterday, FOMC had a very bearish closure here, closed near the low. We analyzed that this was a seek and destroy daily profile, so overall continuation of the bearish trend that we have. The market has created a low of day inside of a new day opening gap identified as a discount drawn liquidity. Right, so now the two discounted drawn liquidity that we had coming inside of the week have been traded to, right? And the only one left of importance out of this range, in my opinion, is the weekly fair value gap, right? If the market were to displace past this range, you know, it might want to make a run for the lows, right? Or if not, come back very deep. Okay, inside of there's a fair value gap in here that was left open. It would surprise me honestly, but everything's possible, right? Ideally, I would like for here inside of this range for August to start finding a reaction, because coming inside of the week here, right, and we had analyzed the fact that this was the last week of the month, right, and if this week would have provided the possibility of an open low high close profile, there would have been high odds, in my opinion, for August to create a low of month early on. Okay, but so far this week is delivering as an open high low close, not as an open low high close. So for this reason, sorry, I do believe that the discounted drawn liquidity, right, for the rest of the week should be the weekly inefficiency, and then that can offer an opportunity for August to potentially create its low of month to trade higher. Okay, well, that's going to be a discussion for another time, right? But meanwhile, for tomorrow, discount drawn liquidity, weekly fair value gap, premium drawn liquidity. Obviously, we'll refine those on the lower time frames, but I talked overall about 27,700 here, 50% of the daily suspension block that was inverted today. And then past this level, if the market were to expand above 50% of this range, it would be the previous daily high and overall the FOMC wick, the rejection block left from FOMC. 4-hour chart, same picture again. In case the market will deliver an open low high close profile, then I do believe that the drawn liquidity should be the FOMC open, right? So 50% here of that suspension block, and then there would be all this wick to go through. Okay, so if price were to trade inside of this range, this is when I would put up these quadrants on my chart and seeing how price is reacting in time, trading at these levels. In case of a super aggressive gap higher, then maybe the draw liquidity will be the NWOG, but I think that is pretty low probability in my opinion. But the market will do these things when people least expect it, right? Especially after a strong sell candle like this. You know, for all it matters, the market will never get down here and can start trading higher from here. Personally, I believe it's low probability, but we need nonetheless to analyze premium drawn liquidity in case this scenario were to happen. If not, again, discount drawn liquidity, weekly inefficiency. 3-day look back, we analyzed the phase of price delivery. We saw that on Monday, price has created a classic sell. Tuesday was followed by a bearish swing to Z, and yesterday was a bearish seek and destroy profile. Okay, so overall in the range we have expansion to consolidation to consolidation to expansion. Okay, so since the market closed here as an expansion, again, I said that given here the range that we're trading in, price finding sensitivity inside of these higher time frame discount arrays, right, and overall the range here of the 3-day look back being pretty high resistance, I think it's better to simply stick with these levels instead of trying to find PDRAs of relevance inside here of the 3-day look back range. Now in premium, there still is one, right, which would be the new week opening gap. That would be for an extreme case, right, in case of an open low high close. I think the only possibility of price trading back to the NWAG again is in case of a gap higher or quick sweep of the previous daily low, right, and immediately start trading higher, right. Ideally, I would like to come inside New York session, seeing Asia have already displaced these levels, right. I would need to see. Look, basically what I'm saying is, if you want to be long, you don't want to see price spending too much time inside of this range. You would want to see this range be low resistance, right, and be left here essentially as a parabola, right, some kind of balanced price range inside of the range. If not, what I'll personally anticipate, given the context here of the weekly profile, I would prefer trading an open high low close profile, the market retracing here inside of this hourly fair value gap, which happens to align right at the lower half here of that daily suspension block. We analyzed that there's a lot of PDRAs located inside of this range, such as a bearish breaker, such as a bearish order block. There's a lot of wicks also, right, cutting that this fair value gap cuts through. Right, so if I see the market trading inside of this range and creating high resistance, that will give me confidence to look for a drawn liquidity towards, the range around 27,000, maybe a bit below it, right? I do think that, if the expansion of today, if today will expand lower and will be aggressive, then I do believe that it might reach for 26,500. But overall, I would probably anticipate for the market to get down to 27,000, right, from 26.8 up to 27,000 in case of an open high low close. Any level past that would be in case of an extreme scenario where price quickly creates a high of day, right, and New York is already trading at these levels and provides an expansion lower as a continuation. And again, premium draws, right? If I come inside New York and I see that the market has already closed above of 50% here of the daily suspension block, I would prefer personally to look for a drawn liquidity, maybe back to 28,000, give or take, right? This happens to align with the previous daily open, happens to align here inside of the wick, maybe the upper half of the FOMC wick. And this idea would be overall a double purge, right? But again, I only thinking it can get there if it has the gap up or if it has a quick sweep to then immediately start trading higher. Okay, I think that covers it for today. Good luck and good trading.